Hey everybody, Boris BK Forex. Welcome to the weekly technicals for the majors for Eurodollar, dollar yen, and pound dollar, November 5 to November 9, 2018. A week of reversals. It really was a tremendous week of reversals, and we close out the week very much to script as we change flow one more time. First, we had massive pro-dollar flows, then we had massive anti-dollar flows, and we kind of wound up reversing even those. The levels on the majors have shifted a little bit. The euro tested the 1300 and really looked like it was going to break it, and then came back yesterday with a complete reversal, major short covering, and now we're still in that 15 to 13 range to the upside. Dollar yen did find support underneath 112, and we did eke out a gain above the 113, but frankly the move was just been not impressive. Dollar yen has certainly not been trading the way U.S. data is supposed to have made it trade. U.S. is leading everybody as far as yield goes, risk on flows pretty much most of the week, and yet still dollar yen just not really having a full-on time, although it looks much better on technicals this week than it did last week. And then cable still very much, cable had a massive rally off of hope and prayer on Brexit. A key component of it was the fact that there was rumors that EU and UK agreed to some sort of a cooperation for the UK banks, for the finance industry. The finance industry is literally the single most important part of the whole UK economy. And if it cannot fully integrate with Europe, that will be the death knell of the UK economy, irrespective of every other factor. So this was a massively positive move, but it really wasn't corroborated. It was, it went off on the assumption that they were on the verge of an agreement, and yet there's not been any formal agreement. Should there be one, it's very feasible that we could take out the highs here and maybe go through 232s. But until we get something in writing, affirmed, confirmed, cable is still very much an up and down yank move, as we've seen so much over the last couple of weeks. The calendar itself this week, much less active than it was last week. There is important data, but it's really kind of taking backstage to all the political going-ons in the world. Let's just kind of review sort of where the politics are. The politics in Europe center on the fact that Italians and the European Commission still very much at odds on the fiscal issues, and very likely going to go to a head on that issue. There is no compromise so far that's possible. In UK, the Brexit negotiations and internal UK politics still very much in turmoil. Nobody really knows where it's going, and we're just ticking towards a deadline. And in the US this week, we have the midterm elections on Tuesday. Now, conventional wisdom in the US is that Democrats are going to win the House, Republicans are going to keep the Senate. Even if that happens, that's a major shift of power against Donald Trump. But, and this is not a conventional view, I think there may be an outside chance that the Republicans get to keep both houses. If they keep both chambers, that will be viewed, at least initially, as a majorly dollar positive move, because it will mean continuity and pro-market forces and all those things that the markets believe. Whether that's true or not really remains to be seen, but that could spur the kind of a rally, the kind of a breakout in dollar yen that we may be watching. So that's the surprise scenario that I think nobody's factoring in, that may have not a small degree of possibility the way things are going. So aside from that, the economic data is as follows. We have on the European side, PPI. We don't have, let me see, I don't think we have anything really of material value here for the majors. No, we have the UK, I think Kathy is missing the UK PMI services. There is, oh, here it is. I'm sorry, I'm missing it. I'm not looking at it. We have the UK PMI services. That is the very important factor. The reason why this is important actually is because the manufacturing was really low. If we come close to the 50 boom bust level, that only exacerbates markets' view that if Brexit isn't done, UK economy falls off a cliff. So that's probably the single most important event at the beginning of the week on the major side. And then middle of the week, we get nothing. Trade balance and manufacturing on Friday. I think on the U.S. side, I'm just looking here. we get GDP numbers on Friday as well out of UK. And then on the US side, just more PPI. There really isn't much. On Thursday, we do have the FOMC decision on the US side. The thing about this, though, is that it's really not going to be a market moving event because there's no expectation of a rate hike, and very likely the Fed is going to maintain its posture. It's really not going to change its language. There's nothing in the employment data today that really would make it want to slow down, even though there's lots and lots of red flags on the economic front as far as the US economy goes. The labor data so far is proving to be a little bit more resilient than the market thought, and I think that just keeps the Fed hawkish as we go forward. That actually, in some ways, is not positive dollar. It's certainly not positive dollar yen because that creates more risk off flows on the equity market, and dollar yen is really trading on those things. But that's really end of the week. The front of the week is really going to be all about the US election, and that's where you could get a potential boost to the upside. Now let's take a look at the technicals, which are really reflecting this whole up-down reversal mode. So the interesting thing to me on the technical side here is that clearly, when you're looking at this, euro has made a double bottom, right? But, and this is a massive but, this is where I'm really not a euro bull. If you'd asked me Thursday, this looks like a great candle ready to blow off. We have, huge potential to the upside. We could possibly reach 1450, 1500 over the next couple of days. But today's reversal candle really sends a pretty negative signal. And to me, I don't want to be a buyer of euro until and unless we clear the 1450 level on a closing basis. If we clear that, then yes, this negates all of this hesitancy, and we have a chance now to come back and recapture the longer term SMAs at around 1550, 1600, and possibly set up a more durable double bottom. On the other hand, there's a small amount of risk here because it's really only about 50, 60 points. If this indeed is a reversal signal, then trading against the signal may make a lot more sense. But generally, and this is where I think it all comes down to, we are effectively range bound until one of these areas gives. But when it does give, I think the dam will break. If we take out the 1300s with a vengeance, if we go to like 1250, it's going to be very hard for euro bulls to hold it back. That would suggest weak economic European data, possibly an extension of LTRO, possibly loggerheads with Italy. I mean, just all your favorite chorus of nightmares out of Europe. All of that breaks the 1300 and then takes us all the way out, possibly towards the 110 over the next month and a half. Conversely, a break to the upside on the 1450 would very much validate this double bottom and suggest that we have at least an extension all the way up to 1600, which is the top of the range. So to me, the euro at this point is a punt. It's much less of a risk punt to the short side, but generally I'd want to get involved only if one of these areas is broken to one side or the other side. Cable also very strong move off of this financial deal, no deal story. We did hold the 27s. That is quite bullish. And Cable certainly putting together another relatively decent looking double bottom. But, Cable is also notorious for coming back and retesting it. To me, the interesting thing here is if we do retest it, can they hold it? If they do hold it, it becomes a much more durable bottom. Do I want to chase it at this point? No. Even though sometimes it does pay to chase Cable, the problem with Cable is chasing it means it's just the risk here is massive. You really have to have a 400-point risk to basically see if this trade essentially works out to the upside. It's way too overextended. Now here's yen, which looks the most interesting to me on a technical basis, because this kind of a formation where you have a nice double bottom and a tight curling extension like this is kind of a cup and handle formation. But generally, I've seen this 1,000 times. It's a very bullish formation. If we can just get that push, any kind of a positive dollar push, it's very likely we can extend to 1,400 and maybe even 1,450. It may be a situation even where the market kind of anticipates a Republican sweep and pushes the dollar yen higher ahead of the midterm election. Regardless, this to me right now, front of the week, probably the strongest looking trade, just simply because the risk is relatively small and the formation looks relatively good for a stronger breakout towards the 1400. That's how the majors shape up. I wish you guys the best luck, the best of trading. Boris, over now.